Welcome to Markets Now. I'm Michelle Rook along with Brad Kooima with Kooima Kooima Varilek. Livestock futures back to the plus side after kind of a mixed opening, and we're quietly mixed in the grains. Brad, let's start off talking about the cattle market. We did see some profit taking yesterday, but it doesn't look like we did any technical damage. So the fund's back in defending that long.
That's how it looks to me, Michelle. I think that's a valid point, leading with no technical damage. Thanks for having me on. Of course, I really get a kick out of doing this with you every week. But yeah, no big reversal. If you hearken back to last Thursday, Friday, where we were spectacularly higher on live cattle and feeder cattle, one would say, hey, a little setback shouldn't be too uncommon or unnerving, and I thought that's what we had. We had some pretty salty news last week. The South up $3 or so at 183. The North $1 higher at 185. So yeah, I thought yesterday was all about correction, and it seemed to start mostly in the feeder cattle trade, particularly, and that's what hurt the back end of the cattle, live cattle as well. I thought anyway. Started in the feeders.
Do you think cash will be higher again this week?
I think we're all going to ask higher. I've been trying to, this morning I've been talking around to my so-called friends here that I've gotten to know over the, of how do you balance the fact that the futures now, for the first time in quite a while, are carrying a bit of a premium to the cash, to everybody's cash, the South and the North. So the futures are telling you it's going to get better. Have a little bit of carefulness about that, right? But do you balance that with then I feed cattle. Okay, so these cattle make lots of money here. Who's kidding who? That is pretty easy incentive for some of us to say, well, I mean, why? How do I pass 185 when I know that the cattle really, really work here? Yeah. And it's that time of year where maybe you need a little pen space here anyway, where you got new feeder cattle coming in. So I think we'll be a little bit stronger. I'm going to go a steady to a buck higher, and see once if it's only steady, maybe it's because of that reason of we're a little easier sellers than we might have been otherwise, just because of the the profitability. Now, this weather has really, really improved, Michelle. I'm starting to hear some better than expected weights, which is a direct opposite of what I've been hearing since the winter, right? And then a bad summer with all the heat. So I guess let's keep an eye on the weights and our relative currentness. Thankfully, we're super current coming into this little deal, so I don't think it'll be a big problem.
So we get shallow corrections, we go back up and make new highs, but I think ultimately everybody wants to know, how high are we going? Do we take out 200? I know you and I have talked about that before. And how long does it last?
I'd love to know how high we're going too, actually. So if you get somebody like that, let me know. I'm guessing, like the rest of us, last week, I think you pinned me down and made me, say if I was to bet a beer, I'd go 212. Okay. Which isn't what I do, but you've already got some packers that are willing to offer plus basis deals in April, for instance, where you're well over 200 already for what they're willing to pay. So the whole thing keys on whether you have some sort of a demand event that we can't anticipate. Otherwise, we're doing everything right here. We're staying current. We haven't destroyed. I don't see a big decay in the demand deal here yet. We're still selling a lot of meat at a very high price. I don't know. That somebody that can predict allegedly that they know when demand's going to stop. They're a lot smarter than I am. I don't think there's any way to do that until it smacks you in the forehead. So, do I keep an eye on the macros? Of course. The S&P futures are right on one of my screens over here, the bond futures, and a little bit to a degree, the stupid crude oil here now too, lately. So, but I guess I'm going to ride the horse till it bucks me off. I think the market's in pretty good shape, and the real tight numbers actually don't start until the first quarter of next year.
Yeah, so we'll see how far we want to stretch this thing. You mentioned the macro environment. Fed meeting, we'll get, an update tomorrow on whether they're going to raise interest rates or not. You mentioned higher gas prices. We have a looming government shutdown, but none of those things apparently concern you from a macro standpoint.
They absolutely concern me, but I can't predict exactly what that, and they throw in the UAW strike.
I was going to say auto workers too. Yeah.
but all that stuff this isn't a secret that only you and I share, and the market is already, I think, absorbing most of that into the deal. To me, the thing that I'm not an economist, right? I trade the S&P because I think it's a hedge against, a bad economy. But I think it's remarkable as strong as the stock market is, remarkable. And I stronger than I think it deserves to be, but that's just one guy's opinion. So that's the first thing. I think that if we start to feel like we're skating on thin ice, that'll be the first thing that you'll start to hear some cracking noises on, in my opinion. So we'll see. It's over my pay grade.
Yeah, me too. Hogs rebounding here after a mostly lower day yesterday, except for the October contract. Is that market doing anything but chopping around sideways, or do we have a direction? It's hard to tell some days.
I'm looking at December hog chart here over my forehead here. Not mean to be rude, but we are the exact same price that we were in June and July.
That's what I mean, sideways.
I know, and they're not easy to trade. Some of the old school fundamentals that I follow here, in other words, availability of feeder pigs, the price of feeder pigs, which got really cheap, which would tell me that there's all kinds of pigs going into the mix. But Joe pointed out this morning to me that also that the trend generally of pork prices and hog prices in China has been distinctly lower here lately too. So, you can't really talk about hog analytics without somehow mentioning China, either in their ability to produce or what their demand and what they're doing with us from an export standpoint. So, if they get back on their feet productivity wise, that does not bode well for us. I'm still inclined to kind of be a hedger first here on the hog thing, but yeah, like you said, that they haven't really accomplished much here. They've been mostly sideways. So maybe I'm overreacting, but I'd be more inclined to use the top end of this trading range here, where we're near, to maybe do some hedging.
Gotcha. Corn, well, we made new lows yesterday. We're trying to bounce a little bit. I know we're seeing a little harvest pressure, but where do we hold here? Do you think we have a lot more pressure coming?
A lot more, no. I'm hoping that the calendar helps us here a little bit. September would be a very common time period for a seasonal low to happen.
True.
One of the things that I think we struggle with here a little bit, and not to be unfair or make anybody feel bad here, but I feel like the makeup of the market is a little dangerous. The funds are short. They're making all kinds of money. Now, some traders, some analysts will say, well, the funds are short. And, he who sells what isn't his and buys them back or goes to prison, or make up all this stupid commodity sayings that I know a million of. Yes, he has to come out sometime. But if I was a betting man, and if the public, say, for instance, was long and the funds were short, I'm afraid I would have a tendency to bet on the funds. So you got a strong entity that's pressing the market. Now, having said that, we're nowhere near where we were in price here not very long ago. Right. 450 has been a historical benchmark. Could we get that far? Yeah. If it really would have a bad moment, get all the way back to this breakout here a couple of years ago at 430, hopefully for 5 minutes. We don't even have to get that cheap, in my opinion. I can't imagine that what has been so poor, which is demand, is bound to improve because of price. And first of all, in the ethanol sector, you got $90-some crude oil. I got to think that that's going to help, the grind here from the ethanol guys. So hopefully that'll make us catch. Generally speaking, right in my backyard, yields are better than expected. And I know there's places that are not that way, but that's the way it is up here in Northwest Ohio.
Well, let's hope that long-term 450 support does hold here. All right. Thanks for joining us, Brad Kooima with Kooima Kooima Varilek. That's Markets Now.